Hi everyone, and thanks for taking a few minutes to listen to this audio recording I'm doing today with Todd Williams. Now, Todd is the managing director of a company called E2 Metals. Now, I'm going to get Todd to talk about the E2 story, and I also want to pick his brains around gold and silver, two commodities I'm getting asked lots of questions about. Todd, thank you, mate, for being here with me.
How you going, JP? Thanks for having me.
No, mate, it is good. And I am really glad that you're going to be able to tell us a little bit more about the E2 story. And I've known you for a long time now, and it's been fascinating to watch the journey of the business. But I also want to pick your brains. You're a wealth of knowledge around gold and silver. But before we delve into that, tell me a little bit about the E2 story, the E2 journey.
Yeah, so E2 Metals is listed on the Australian Stock Exchange under the code E2M. And essentially, we are a mineral exploration company based in South America. And I guess what's interesting is that we are a Adelaide-based company. We've got a lot of Adelaide capital, a lot of Adelaide IP, and essentially we've gone over to Argentina, not because we love the steak and the red wine, but mainly because that's where the gold and silver is. So we're in a really nice jurisdiction. You know, we've got world-class gold mines over there. All the big gold mining companies are over there. And essentially what we've done is we've picked up a really strategic land holding along trend from one of the largest gold and silver deposits in the world. And we've formed a view that we think we know what's happening undercover. And over the last 18 months, we've basically been piecing together what looks to be a really exciting new gold and silver discovery. And
talk about the connection back to Adelaide as well.
Sure. Well, I guess, it's a very simple connection in that, you know, I started a private equity group focused on piecing together district scale land packages over in South America. And like I said, we're not in South America because we like the language. We're over there because that's where the opportunities are. And, you know, we operate in an investment class where, you know, you're rewarded by outliers. You know, we're talking about the sort of high risk, high reward type investments. And, you know, for us, people tend to, I think they tend to underestimate technical risk, which is, you know, how hard is it to actually find something? And they overestimate political risk. And so our thesis is you're far better off going in to, let's call it spicier jurisdictions where you've got far better odds of discovery than sort of hanging around in your own backyard, if I can put it that way, and operating in a depleted search space, if that makes sense.
Yeah. And you know, I want more people to learn about the E2M story. It really is, as an outsider looking in, a fascinating journey. But without pulling out the crystal ball, I mean, what do you hope for next year for the business, for the next 12 months? What's the goal?
Oh, look, so the goal is to try and solidify the discovery that we've made. And, you know, what's really interesting is that E2 started off, 2.5 years ago. And, you know, we've operated in a global pandemic for two of those.
Survived it.
Yeah, survived a global pandemic. And, you know, that's not a small feat when you're sort of jumping through all the usual, ESG type hurdles that you come across in the mining sector. You know, there's quite a lot of detractors in the mining sector, and then you throw COVID-19 and a global pandemic on top of that. So it's been a huge achievement just to get to where we are, which is a point where we've taken an initial concept, which is, hey, here is a patch of ground which we think is prospective for a gold and silver discovery. It was an area that had never had a single drill hole in it previously. Which is really interesting given that it's 15 kilometres from a world-class mine that's been operating for 30 years. And, that's because a lot of the prospective rocks were undercover, 5 to 20 metres of shallow cover. And so we had the sort of the creativity and the courage to look at that and say, well, hang on, why would the gold and silver stop at the mining lease? Why can't it continue under this shallow gravel cover? And, we really put ourselves on the map November last year when we announced an exceptional drill hole from Mia, 18 metres at 47 grams gold, which I think it was one of the biggest gold and silver drill hits for all of 2020 globally. So
wow.
it was, truly a sort of exceptional drill hit. And so that really put us on the map, and it enabled us to bring in a lot of institutional investment. So we raised $13 million from a group of domestic and offshore North American institutional investors. And, we just got the timing right. We announced that hole right when, the world was sort of going to hell in a handbasket with COVID-19, and the capital markets were blowing up, and everyone sort of, saw gold as a safe haven. And so, look, we picked our timing. That was a perfectly timed capital raise, which was fantastic because it enabled us to strengthen the balance sheet with very little dilution to our existing shareholders. But, look, the reality is we've now been a victim of, let's call it the rejuvenation in the global economy. Since the vaccine was announced, it's pretty much been complete headwinds for gold and silver. And, we've just seen a complete risk-on mentality with almost every single asset class. And, just to wrap some context around that, we made an excellent announcement last week, a very similar discovery to the Mia drill hit in November. And, where I sit today, the share price is sitting around 30 cents. And, it's an apples for apples type discovery, same sorts of grades and thicknesses and tenor. And it's just a different market, if I can put it that way. And so, our job as managing directors of a junior explorer is to accept what you can control and what you can't control. And at the moment, what we can control is continuing our, ongoing drill programs, making further discoveries, building out a resource base, which is obviously the main objective of the company now. So we're taking it from an initial discovery and idea through to actually building out a tangible resource. So really what we do is we're trying to create a coiled spring. Do you know what I mean? So my job is to create the tension in that spring, and it's the market's job to let that spring go. And the second part of that equation we can't control. But what I can tell you is that we're pulling pretty hard down on that spring every day with, every week and month we're sort of building the picture and improving the story.
And just lastly, we talk about institutional investors. They have obviously their own objectives when it comes to putting monies into an investment. Talk to me just high level when you have individual investors and what they're typically looking for out of an investment in an E2M. So what type of person, or more so, what are their objectives from an investment?
Yeah, look, we've got a really interesting register, and it's a product of the private equity group that I founded prior to E2, in that a lot of those shareholders are now major shareholders in E2 and have supported all the capital raisings to date. And so, we've got a very interesting continuum of like really long-term sticky shareholders. So in the sense that, they invest in E2 because they think we've got a real, red hot shot of making a discovery and generating value, step change value. And, they're willing to sit back and wait. So if it takes, 2-3 years to go from 30 cents to $3, they're quite happy to,
they believe in
participate
the story, right?
in that. That's right. So they have to be, at the end of the day, you have to have conviction when you invest in micro caps at the scale of the shareholders that I'm discussing, because if they get it wrong, no one's going to line up to buy 10% stake in a micro cap junior. So they have to have conviction, and that trickles all the way down from the high net worths, the institutional investors. We've got Acorn, which is a very reputable micro cap investor. They've just come out and announced that they're a substantial shareholder in E2, so they've been sort of growing their holding as the story progresses, which is really encouraging, because it just means that they see the value in the ongoing work that we're doing, and they're happy to sort of like open their wallet and accumulate. So, yeah, look, I think every institutional is different. Some of them are thematically driven. There's a lot of institutions that are now short gold or have almost no gold holdings. But, as we've seen, when the market and the general consensus is that people need gold, there's just not enough equities in the ecosystem to participate without, driving the prices significantly higher. So
let's talk about the commodities themselves. Now, we could inch wide, mile deep on this one real quick, but give me your view on gold and silver as best you can for the next 12 months. Where do you see it going with what you're seeing at the moment?
Yeah, well, I think there's several arguments, and I try to provide balanced arguments. I'll try not to be one of these tinfoil hat gold bugs, but I guess this is how I see precious metals in a nutshell. Firstly, gold and silver is on the nose. It's up against some major structural headwinds in the short term and possibly the medium term. And the reasons for that are really quite simple. You've got real estate that is moving higher than before the subprime crisis. You've got tech stocks that are doing better than the tech bubble. You've got this confluence of meme stocks and, just basically pump and dump stocks, which is just completely unprecedented. And, and then the PE ratio, the price earnings multiples that we're seeing in just the broader equities is, some of the highest we've seen since the GFC. So, we've got this perfect culmination of like every single bubble we've ever seen in history, all occurring at once. And so when there's so much easy money to be made, why would you invest in gold and silver?
So that's seen as a defensive historically.
100%. And so I think that will be the posture of the market until it's not.
Yeah.
And then when it's not, it sort of becomes too late. It's no longer a contrarian trade. And so that, that's what I would say is like in terms of the micro cap space, from, my observation is that how you make lots of money or the easy money in the micro cap space is that you've got to be one step ahead of the institutional retail cash inflows, because once they turn on and they sit down in their investment committee and say, all right, we need to be long gold equities, it's kind of too late. You've already missed out on a double or a triple for doing nothing.
Yeah.
So that's I think that's the comment, my first comment. The second comment is that, I think the macro environment for gold and silver is probably the strongest it's ever been. Mm-hmm. And, you only have to look at sort of M2 money supply, which is just total money out there. And, generally there's a direct correlation with the expansion of the financial system and inflation or tailwinds in the gold price. That just makes sense. Gold is a proxy for currency debasement. As currency becomes worth less, gold becomes worth more. And so, there's a very sound argument that we've seen unprecedented quantitative easing, unprecedented money printing, yet the gold price has just sort of rolled off over a cliff and fallen 20%. So how does that work? And so there's a decoupling there from commercial reality or economic reality that needs to be, there needs to be mean reversion, if I can put it that way.
Yep.
And mean reversion looks like gold going to $3,000 an ounce. So if you believe in mean reversion, that you believe gold has to go higher. So look, that's a really strong argument. And then, the other argument I would have is just a basic observation around the geometry and form of every gold bull boom that we've seen in the past. And, what's really interesting is that gold peaked in 2011, 2.5 years after the financial crisis. And it's just funny how these things always occur. When you look at inflation over the last 100 years, which I've done recently just out of interest, and you look at this sort of secular trends around expansion of money supply and then inflation, those two never happen at the same time. There's always like a 3-year period where you've got net expansion of money supply, the rate of money increases in the rate of supply drops, and then you see inflation actually picks up over 2, 3, 4 year, 5 year period after.
Yep.
And so if you just think, if you think past this prologue, then the reality is inflation's coming. It's here to stay. The genie is out of the bottle. And so, in that context, how would I summarize my thoughts on gold? The really strong macro setup for high gold, deep value in gold and silver, particularly silver equities in a environment where there's no value, if I can put it that way.
Yeah.
And then, just to comment on E2 as an investment and, these sort of companies that explore for gold, by the time your Uber driver is telling you need to buy gold stocks, you've already missed out on a 500-fold return. Yeah. So, you sort of have to have a go at these things when they're out of fashion, to be honest.
So I think to wrap it up, so if anyone's listening to this and what I hear from talking to Todd is, I guess, supporting the message that I've been saying is that if we look around the asset classes around us and what's trendy and what's the FOMO at the moment, everything's overcooked. And we look at property, we look at Aussie equities, we look at the NASDAQ, we look at the broader assets. Everything is just running through the roof. So if you're of the same view, if you feel like asset classes and other markets are just looking overcooked and you want to play a different story, and that story is to start getting exposure to the commodity space in readiness for when they start to run, then your choices are you can do them via, a super defensive buying gold ETFs and things like that. Or for those that are really focused on growth and wanting to look at trying to attain serious returns, then it's looking at the explorers in your space. So for those out there listening and that wanted to learn a little bit more about getting exposure to gold and silver, that have a belief that those commodities will come back around, but they want to get in early, and they also want to do it through not just the really defensive ETF strategies, or physical, for those that want to buy physical bullion or whatever, then it's talking with myself or talking to Todd about how you get into the explorer phase, just to get in early. So look, that's it. It probably went a bit longer than I planned. I tend to do that. I hope this has been informative. Look, if you do want to learn a little bit more about E2, please reach out to me. I'm happy to put you in contact with Todd and grab a coffee with him and learn a lot more about the business, what they're doing, what their story is for the next 12 months. Also just pick the man's brain about gold and silver. So Todd, thank you, mate, for being here.
Thanks, John. Thanks for having me.